Thanks for joining us this morning. We know 8 o'clock sessions, 8:10 sessions, a little bonus 10 minutes are pretty early after a long evening, so we appreciate your being here. And we're excited to have the opportunity to speak with you this morning. By way of introductions, my name is Bob Jergel. I'm a partner at Gartner Consulting. From those familiar with Gartner, we're largely an IT research firm. But we have a consulting arm that's about 900 people that helps clients apply a lot of the Gartner research. But I've spent most of my career I guess going on 30 years now, in around insurance. And I've had the good fortune of working across the whole life cycle from the broker side, the primary side, and the reinsurance side. And over that 30-year career, I've seen many technology changes from hard-coded behemoth systems through modernized systems and now to artificial intelligence. And so that's what we're delighted to speak with you about this morning. Charu?
Good morning, everyone. First of all, thank you. I know it's a 8 o'clock session, and it's not easy to be here at 8 o'clock. I'm Charu Chaudhary. I'm a managing partner at Gartner Consulting. My focus area in Gartner Consulting has been always insurance, property and casualty, and life specifically. I do not have as many years of experience as Bob, but I have 18 years of experience entirely in strategy consulting, did a lot of transformation and strategy work for several large and medium-scale insurers. Really happy to be here to talk to you about artificial intelligence, Gen AI, because that's something that we've been focusing a lot on the insurance space for 5 or 6 years. I know the buzzword has started since last 2 to 3 years, but it's been there for quite some time, and we would love to talk to you all about it.
So our agenda for this morning will focus on the evolution of digital strategy in insurance, then cover artificial intelligence, some foundational concepts within artificial intelligence, look at the use of it across the insurance value chain, and then talk about specifically insurance distribution and a little bit about what comes next. Our goal is to save some time for questions at the end, so hopefully we'll have an opportunity to do that. So I love coming to Kansas City. I actually grew up here in the 70s. I think most of Kansas City is on the south side of the river now, but we lived on the north side. And there's pictures of us as kids out on the tarmac at the airport when the airport opened in 1972. And what was cool about the airport is a really innovative design at the time, where it was very designed so you could literally park, I think, less than 100 feet from where your gate was. And then 9/11 happened. And 9/11, and then suddenly what was innovative became a liability because it was very difficult to get to the gates and secure the gates. So it became kind of a metaphor for what's going on in insurance right now, where things were kind of chugging along, and then there's this introduction, companies are making money, profitable, and then suddenly there's been a confluence of things that have impacted the insurance industry over the last few years that have really kind of necessitated, what Gartner would refer to as a digital reset. So digital strategies have been going back 20 years, we'll just say 20 years. But initially they were focused more kind of either on optimization and then on transformation. So optimization was really about automation, whether it was setting up websites so that policyholders could interact directly with the insurance companies, or automating processes. When smartphones were introduced in 2007, then there was the introduction of mobile. And so the real focus, though, was on efficiency and call it cost savings, not necessarily on revenue generation. And then things happened, and then there was more capabilities that were introduced to focus on what we call transformation. So usage-based insurance, digital distribution of product, new customer segments, new buying segments. I would call them almost a micro-segmentation of insurance as the capabilities evolved. But over the past few years, there have been a number of, like I said, big confluences and challenges in the industry that have necessitated what we would call and call a digital reset. So if you think about talent shortage, part of my career, I worked at CNA Insurance. I went to work there in 2010. And I remember at the time participating in a presentation that McKinsey had done and talked about the aging of the industry. And I think about, one of the challenges that insurers have is making sure that they've got underwriters who are making decisions, that 30-year underwriters would make when they're only 5-year underwriters. So I think about that talent shortage in the industry. I think about climate change and the impact on risk and loss. And not just that the risks of the severity and the frequency is becoming bigger, but the ability to predict when those losses are going to occur becomes more challenging, right? We have, I'd say, economic uncertainty that's resulting in fewer people buying policies or being hesitant to buy policies or to cut back on what they're buying. And then, of course, there's artificial intelligence, right? So you think about these as the ingredients for change in an industry. So Gartner talks about, what we would focus is this, we call it a digital reset. I apologize for the eye chart up here that if you're in the back, you have a difficult time seeing. But I'll describe what's on here. So there's three similar to when 9/11 happened, there's kind of this confluence of things that have occurred that's forcing companies to think differently about how they think about digital and how they incorporate things like artificial intelligence into their operating model. So there's three aspects of this digital reset. One is to look beyond customer experience, right? There's a lot of emphasis on connecting more effectively with your customers, more to value with a strong focus on empathy and trust. So how do you get more connected and keep more connected with your customers? In the banking industry, one of their key metrics is like direct deposit, right? They think if you got direct deposit, they've got a sticky relationship with you. And it's still transactional, but they think that insurance companies are thinking more about how do they develop an empathetic relationship with their clients that connect them better long-term to their clients. They think about, the second aspect is broadening focus from automation to human, I'll call it human augmentation. And what I mean by that is that rather than just using technology to focus on automating manual processes, thinking about technology and how to augment the relationship that insurers have with their policyholders and producers. And then the third aspect of this digital reset is what we say just artificial intelligence powers everything. So what do we mean by that? Well, it's very commonplace, right? Artificial intelligence, as we'll talk about, it runs a spectrum from robotic process automation up through generative AI, but there's a whole set of capabilities in between that. But it's very commonplace. In the past, it's been in insurance, it's been about machine learning, but it's much greater than machine learning. It's just not about data. It's about decision intelligence. And then lastly, AI has risks, and organizations need to think about the benefits, but also the risks associated with pursuing a path of artificial intelligence. Right? So our focus today is going to be on artificial intelligence. We're not going to dig into all of these, given our topic and focus. So we'll spend a little time now talking about artificial intelligence.
Thank you, Bob. So my goal from this session is that when you go out of this room, you're not scared of AI. Think about the time early in 90s when you sent your first email. If you were in college at the time, or if you were working, you would have received your first email ID. The thrill to connect on a very different level, right? That feeling was something else. We felt the same on November 30, 2022. With the invention of ChatGPT. OpenAI launched ChatGPT. And the reason we felt that excitement was A, it was easily accessible. right? The only language that you needed to know for that was not Java or COBOL or any other fancy language. All you needed to know was English, right? You could write your own prompt and you could get the same feeling. Does that mean that it is a new concept? Was AI launched on November 30, 2022? Essentially not. It's just that it had a great sales and marketing team behind it, right? It's all about that because we have been using artificial intelligence for several decades. And in order for you all to understand that, right, I wanted to take a brief history lesson, and I promise I will not make it boring. So let's talk about what was one of the biggest milestone. And I'm saying this is as 1950s, not because that's when we started AI, the journey for AI, it was way before that. Having said that, the biggest milestone for artificial intelligence was your traditional programming languages. Anyone who has worked on insurance for a very long time would have seen those black screens with COBOL and JCL on them, where you had to start writing your code only from the 8th column, and if it is 9th, then you can't run your code, right? So prior to that, one of the first languages was Fortran. And this was called as the traditional programming language. This was one of the biggest milestones, beginning of AI. Do you know what this era was called? This was called as symbolic AI. It was still an artificial intelligence. It's just that it was rule-based artificial intelligence. You had set of rules, and these rules were followed to give you the outcome. And that's what was the beginning of your AI. Then came your machine learning. Now, when we talk about machine learning, right, at the time in early 1960s and late 1950s, artificial intelligence was actually same as machine learning. They were not considered different. What it meant was that we had a lot of historical data. We had just invented traditional programming languages. We had statistical and mathematical models. And all of these three combined was called as machine learning. So basically, using your rules, using your historical data, we were actually able to create outcomes. And this is what your machine learning did. At this time, there was something that was maybe a grandfather for your ChatGPT, which was your ELIZA. This was basically a conversational chatbot, which was not creating new content, but actually following certain specific rules to create conversational output. So ChatGPT is not new. We've been doing it for several decades. And then let's look at this diagram. Now, it looks a little complicated, but it's as simple as it can be. We had our traditional programming languages. We created we had the historical data. We combined these two with the mathematical models, and we had machine learning. At that point in time, there was this controversy that is machine learning only thing for AI, or there could be different other approaches to it as well. And one of the things that came about was your deep learning, which is where you are not just using your statistical models, but you are actually making it think like a human brain. Neural networks, right? That we think differently. We don't just follow set patterns. We don't just follow set rules. We think out of the box. And that is what your deep learning was. This was late 1970s, 80s, when we figured out that AI is not just machine learning, AI is not just deep learning, but it is more than that. And we kept on building on it. It was just evolving. And then in 2010, we had our generative AI. Now, the way it is different from all others, it is building upon those building blocks of your traditional programming language, your machine learning, your deep learning, but it is creating new contextual data. And that's what was different in 2022, because it was not something that we had seen before. It was accessible, but it was also creating new conversational data for us. And this was another milestone that we talked about. I hope after learning all of this, you are not stressed about the fact that there is something new that has come about. We have always been using it. It's just that it is evolving over the time. I know that in December of 2022, all of us were stressing about that, oh, maybe we may not have our jobs. But 2 years down the line, we are still working, we are in a conference, and we are going to be like this for unforeseeable future. The power of ChatGPT, that is something that I wanted to talk about a little bit, right? Because if you look at it, at the beginning of this conversation, I spoke about the fact that it was easily accessible, it was easily usable, and that's the reason that it became so popular in no time. If you look at the numbers, right, to reach 1 million subscribers for ChatGPT, it took only 5 days. The Twitter, which is one of the most toxic places if you want to be, but in Twitter, it took them almost 24 months. So look at the difference in a way that it actually gained popularity. Having said that, just being popular doesn't mean that it is usable, right? So it might not be of great quality. So we'll have to see where this progresses, and we'll talk a bit more about how it has been used in insurance. If you all know Gartner, Bob has been at Gartner Consulting and Research for a very long time, and he would want to talk about these 2 points for sure.
We know how much you love predictions. Gartner, if you don't know Gartner, one thing to walk away with is Gartner loves predictions. And so when we reviewed our presentation with Karen the other day, I think there were 10 predictions on here, and we said, let's cull this down to the things that probably matter the most to this audience and in this topic. So the good thing is we don't need to be or get to be held accountable to predictions. But so these predictions were done last year. And one of the key ones maybe to walk away with is by 2026, 70% of software vendors will have embedded generative AI capabilities within their software. And that's up from 1% last year, right? So vendors are trying to figure out how to embed these capabilities right into their software. And then the second one, I think it's more around human interaction. It's by 2027, 75% of new analytics content will be contextualized, right? So it's not automation, it's contextualized content that really support, I'll call it a composable connection between insights and action. So if you think about it from an insurance, like what is specific information about a policyholder that you can use to help enable a better relationship and more contextualized recommendations. So those are two key ones that we thought were meaningful for today's presentation. So what does it mean? Companies need to know what's in the technology that their vendors are providing to them. That's the number one thing, and it's critical. We've seen clients adopting policies that require their vendors to be transparent about AI capabilities that are based right into their systems. Second one I would say is if you don't have policies around this, that's a big risk. And because it allows your vendors to introduce things without your knowing it, which may have an impact on your organization or your operation. And the third, it really can be used. The power is there to really enable connections between producers and policyholders. And so there's a huge amount of capability here. There's a huge amount of opportunity here. As Charu said, jobs aren't going away, but it may be a more meaningful relationship. But really need to know what's in the systems that you are using to enable that relationship with your policyholders.
All right, so after my brief history lesson, these slides would be easier to digest now. So we basically, in following slides, are going to talk about anything from the traditional programming language to your machine learning, your deep learning, your generative AI, how all of that has been used in the insurance value chain over the years, and then specifically on the insurance distribution side. So if we look at the journey for generative AI and AI in general, right, the biggest usage that we saw in 1980s to 2000s is the use of machine learning. Machine learning, if you remember my first point, right, that was the first AI technology after traditional programming language that was created. And that's the reason that it is one of the most used AI technology across the industries, not just insurance, but banking and others as well. Having said that, one of the biggest use cases for machine learning was your underwriting processes. But does that mean that at the time in 1980s we did not have underwriters? Of course we had. The issue there was that we could not just use machine learning. We always needed underwriters to make the final decision because that human augmentation is always going to be important. The way machine learning was used in 1980s was to actually remove the redundant and repeatable underwriting tasks. If there have been historical data, the underwriting decisions were made easier with the use of machine learning. The next step that we actually started seeing was the predictive modeling. Anyone who has talked to an actuary here in the room, they know how do they love their statistical models and their predictive modeling. I mean, that's what they talk about. They have been like using these tools forever. And that is also a form of machine learning and artificial intelligence. Because if you remember, we talked about the using of historical data to create new outcomes based out of statistical and mathematical models. And that is what predictive modeling was. We started seeing a lot more use cases because there was more invention of technology. So machine learning was not just used independently, but then it started being used in coherence with the other technologies. So for example, if you remember the house inspection products that we started seeing, right? It was not just the house inspection, but it also started using and predicting using the historical data. Then we also had the property inspections, your fraud detection. Claims was one of the most used use cases for machine learning and artificial intelligence. And there's a very good reason for it because of the federated data that is found on the claims side. The reason we had not seen during this time frame sales and distribution being a big use case for machine learning or artificial intelligence, because the data is so spread across, it varies. It's very difficult to make any sense of that data. Then in 2022, you had your Gen AI. Now, all of you must have seen a lot of use cases being thrown around in the insurance space. As far as I know, and I've talked to several insurers and on the producer side, none of them have been able to implement it independently. So ChatGPTs have been used for customer experience, but is it something that is going to be used independently without any human augmentation? Absolutely not. And we will talk about those risks in future slides as well. But these are the most prevalent use cases. The future is we are going to see more use cases across the insurance value chain. How it is going to be operationalized, used, regulated, these are the important things that we will have to actually see how it goes on. Future is still looking bright as far as our jobs are concerned, but we'll have to be very, very conscious of the fact that there is a huge governance that would be required if we are trying to implement these use cases. So this was, so Gartner Research also does a lot of surveys. So if you look at this survey, and I know these numbers are really small, right? So I will talk about it a bit. So with a research of 100 CIOs within the insurance value chain, these are the areas where we have seen a lot of use cases being used in the insurance value chain. So fraud detection, underwriting, and claims are your top 3 use cases. Now, 2022 claims were the top use cases, constituting 21% of total. However, in 2023, when we did the similar survey, this number has dropped. And the reason is with the invention of the generative AI, because now we know that with machine learning, we were really dependent on the historical data, but with the use of Gen AI, which is also going to create contextual data for you, we would be able to see many more areas where we can use machine learning. And one of those would be your sales and distribution channels. And from the technology perspective, again, going back to my history lesson, machine learning, because it was one of the oldest technology, it is the most used technology. Having said that, this percentage is dropping. Again, from the similar reasons that now we are seeing a lot more federated data, which basically just means that the source of data is one. Like you have your policy, claims, billing, your sales, your marketing data, all of them residing at one place, which makes it easier for ChatGPT or any other generative AI tool to start using that data. Hence, you see a lot of distribution across other use cases and other technologies. And this is a number in terms of where future is going from the insurance value chain. So when we spoke to 100 CIOs, 49% said that they have already deployed AI ML, and 6% on the Gen AI side. They do see that there are 17% of these CIOs, they say that they are going to deploy in next 12 months for AI ML and Gen AI on 33%. So this is just to give you a number that this is going to increase gradually, but the way it is being used for the insurance distribution will be a little different than any other technology that you are seeing.
So I guess you walk away from here knowing that Gartner's known for two things, predictions and surveys. And their surveys can measure the effectiveness of our predictions. All right, so now we'll talk a little bit about use cases and then go specifically into use cases and distribution. So I apologize for the eye test chart, but maybe for those in the back, you know, a way to think about it is there's two dimensions to this. What Gartner does is we plot use cases across two dimensions, and we've done it for each industry. But specifically, so generic to any industry, think about I forget my geometry axes. So the up and down axis is value, the y-axis is value, the x-axis is feasibility. And so in the top quarter, in the top left quarter, think of those as high value, high risk, or difficult to do. The upper right likely wins, things that are easier and more feasible to do and still generate business value. And then the lower on the bottom is kind of marginal gains, right? So maybe easy things to do, maybe that's where you start to experiment, but you're not going to get a lot of business value associated with them. So, and there's lots of use cases across this eye chart. And this runs the gamut from coding assistance all the way through to underwriting assistant up in the upper left. So there are some very, I guess, the spectrum of opportunities within insurance for the application of generative AI capabilities is pretty vast. But as Charu mentioned earlier, very few deployments of actual use cases right now. So companies are still trying to figure out how will they actually apply generative AI. So let's look at a few of them that are specific to distribution. So I've boxed these. So if you, for those who can see, it's easy to see kind of the up and down where across the value, right? The orange that's going, the vertical orange, that is value or I'm sorry, that's not value, it's efficiency, right? So where you're still seeing heavy deployments, likely deployments of use cases in insurance is driving efficiency, not necessarily driving revenue. But then there's three horizontal ones that we're focused on that are specific to distribution. One is around agent recommendation generation, that's at the top. Customer-facing chatbots is in the middle. And underwriting assistant is at the bottom. And what's unique about those is that the big blue would suggest in the far left column, the big blue would suggest that there's revenue opportunities there. But if you remember the slide before, those are also in the harder to do, but higher business value, right? So it's unlikely that you'll see huge investment in these kind of initially out of the box, but for insurers that can really, for agents that can really figure this out, there's a huge opportunity here. All right, so when we talk about agent recommendation generation, think about personalized recommendations. Remember, generative AI is contextualized content. So it's taking in information and matching it up against, product information, taking individual information, matching it up against product information to give a contextualized recommendation for a client. Think about cross-selling and upselling opportunities. Think about real-time assistance, right? Chatbots, where a policyholder can initiate and continue a conversation much further than they can do it right now, right? Because it takes contextualized information. Most companies have some sort of basic bot, but it's really like, hey, what's my policy number? Do I have a payment due? Basic information. This becomes, chatbots, can become far more powerful once you've trained them how to interpret the questions that they're asking and the recommendations that come out of it, right? And then there's market analytics that would other be kind of a use of agent recommendation generation, use of chat GPT related capabilities, right? Customer chatbot, basic customer support, claims processing, policy recommendations, policy management, sales, right? You don't think of it as necessarily trying to sell through a chatbot, but there's an opportunity there. And you think, as you go from different websites, not necessarily related to insurance, you start to see where other industries have kind of pushed the boundary of how far they'll take you through the process of buying something through a basic bot, right? And then the last thing on underwriting assistant, think about a risk assessment, customer segmentation analysis, personalized support. So these are potential use cases that would impact the distribution side of insurance more so than the driving revenue. You have other ones on this list that may impact like code generation, right? It's not going to impact distribution, but it is going to have an efficiency gain within the company. All right, so this is really just a summary of what we've talked about before. If you maybe an easier slide to walk away from, like what are 4 key things that you might say, like, hey, where could Chat GPT or generative AI, right? Chat GPT is just a capability of generative AI. Personalized marketing, communication, agent recommendations, competitive intelligence, policy summarization. But each of these, as we've talked about, need to be weighed on 2 dimensions. What's the value and what's the feasibility? The feasibility, the harder ones are likely going to be more expensive. But if somebody can crack the code on it, the value is great. Easier ones, that's where most companies are going to start, right? Logically, experiment with things that are probably more sure bets. And before you start to broaden those capabilities out to, touch policyholders, right? That's generally how experimentation is done. Right? So what's maybe a good example of this? And this may be widely known, but I thought it was pretty meaningful. Back to we talk about talent shortage. There's a huge turnover coming, if it's not already happened, in the insurance industry. I was at CNA from 2010 to 2017, and I saw like the experience level of the underwriters, right? And then you think about the demographics of folks coming out of college right now, and not many people necessarily want to stick around and be a 30-year underwriter, even though there's a huge value of being one, but not many people. So I always thought about, in the early days of AI, how do you enable a 5-year underwriter to make a 20-year underwriter decision and do it consistently? So this is a case where Aflac is using, essentially AI capabilities to better equip their agents to support recommendations, decisions, relationship development with customers. So we talked about human, automation, I guess, augmented human interaction, right? So human doesn't go away. It's just better equipping them to support their work and their interaction with policyholders and producers. So what comes next?
So, before we move on, right, another big use case for this that I have personally seen being a lot of operationalization is, I've worked with 7 farm bureaus in last 2 years. Most of them have captive agents. One of the biggest use case that they have been interested in is marketing, because they are membership-based organizations. They have captive agents. They have all the data that is required for them to support their agents, right? They know if they have the membership, if somebody is in a rural area, if they want to market something very specific, a product that is maybe of an interest to them. They have been using generative AI to create that targeted marketing strategy. So that is one other use case that is able to help the agents and producers within the business. All right, from what comes next, right? We have talked about all these AI technologies and we have talked about how these have been used in insurance, but why are we not then seeing so much actually being used? Because there are risks. There are two kinds of risk in this area. One is risk of using/misusing it. And two, if we are not using it at all, then what happens? I'm sorry. All right, so in the early stages, right, as we had talked about, because these technologies are a little bit dangerous if they are not governed appropriately, there are two broader categories of risks as far as AI is concerned. One is model risk, second is usage risk. If you remember, we talked about machine learning. It was based out of the statistical and mathematical models that are being used, then what is the risk for it? The top three ones that we have listed out here is your hallucinations, which is basically false output, which basically means that if there are, because it is creating contextualized data, it could actually create data which is not true at all. Second is bias. Because you are using data, there could be embedded bias in the data in itself, which you are not aware of. And the outcome that is being generated is a biased outcome. And third is your explainability, which is a huge thing as far as regulators are concerned, right? That if you are creating an output or an outcome, you should be able to explain what was the reason behind it. Machines can't do that. You need human augmentation in order to figure out how do you explain your outcome. These are one of the few of the model risks. There are others as well, which is basically your attack. If you are actually changing the input in itself, then there could be adversarial attack that could lead to an incorrect output. Then you have your generalization. Algorithms cannot generalize the output. You would need a human augmentation to generalize it. And then there are unintended behaviors. So these are the model risk. Having said that, there are usage risk as well. What we mean by that is there is concentration of power. Only hyperscalers have been able to use generative AI or machine learning because there is a lot of infrastructure cost, there is a lot of technology cost. By that, what I mean is you would not see small product companies talking about generative AI. You only have NVIDIA, Microsoft, Google. These are the big players because the kind of investment that is required, it's not easy for small technology companies to do that. There is not checking of output, as we talked about, that if you are creating outputs which is not human augmented, you are not getting the right output. And then IP and copyright infringement, which is a huge deal because the data that is being used to create these output, even though it might be a great output, but you can never be sure that you are not using an IP. There are other risks as well. Sometimes PII information is a huge risk because you may end up actually releasing your PII information if it is being not used appropriately. Now, these are the risks that are associated if you are using GenAI. You have to be really, really conscious of how you are using GenAI or AI in general within the insurance value chain. And that is what your regulators are trying to do right now. I'm sure most of you would have heard the SB 21169 regulation, which Colorado came up with. It's now, right now, called as, it has a huge name. So usage of external data for the insurance algorithms and predictive models. Essentially, all that means is it's the first step to your usage of AI within the insurance value chain. What it means is that they are trying to see from your sales, distribution, your core insurance, your downstream data and analytics, if you are using external data, if this external data is being used for predictive modeling or algorithms, then it has to be governed appropriately. Colorado is one of the first states that is doing it. Then you have Illinois as well coming up. NAIC has come up with their own model bulletin for it, which basically means that any state, eventually, if they are interested in, they are going to start implementing their own rules and regulations around it. which means if as a producer or in the distribution side, if you are interested in using Gen AI, great, but if it has to be embedded in the insurance value chain, it will have to be governed by the laws that are maintained by that specific state. And as we know, in insurance, we do not have federal laws. Every state will have their own law, and it will become complicated over the years. So we will have to be cognizant of the fact how we are using Gen AI.
I would add on to that, not just within insurance, but I think every state is still trying to figure out what their policies are related to generative AI. And, a year ago, every state was exploring and no one had really come up with policy. Now they're starting to implement overarching policies. I mean, the positive is that companies have started to experiment and nothing's blown up. And, no high profile, failed use cases. So I think states are getting more comfortable, but, you think about it just at a state level and then state and then down to, insurance industry within a state, it becomes just like insurance, pretty complicated.
And it's not just that. We've recently talked to several insurance, specifically in Colorado, right? And we were talking about, because the focus always had been on the insurance side, on the core systems, which is your policy claims billing. But that's not the case anymore, right? We will have to start looking at your marketing, your sales, your producers, the agents. If they are using any of these generative AIs, all of that has to be embedded into the governance, risk, and compliance of the insurance organization. Because at this point in time, if you are using an external product in itself, how do you ensure that those vendors are not using Gen AI? And if they are, then they have to be transparent about it, because ultimately it would be you who would be actually voting for the regulations. Right? So the transparency is one of the key things that we will have to start looking at from the entire insurance value chain. Then let's talk about what are the other uses. Does it mean that we should not use it at all, which is your do nothing approach? Absolutely not, because you cannot control if your competitors are using Gen AI or not. You would be losing out on a potential market, on a potential customer if you use that approach. You can never be sure if there are no rules and regulations or there are no governance around the usage of Gen AI or AI in general. You can have your staff using it, which is another potential risk, because in that case, it's not regulated within your companies. And the last and not the least is your ethical and risk concerns, right? That lack of understanding of Gen AI in itself is a bigger risk, because you may not use it, but you need to understand it, because if there is anyone in your organization, if they are using it, it's a potential risk. So essentially, when you go out of this session, right, you need to start thinking about where are you in this journey? Are you still in ideation phase, or you are ready to go? If you are ready to go, then are you ready to operationalize it? Or do you want to just execute it as a proof of concept, take baby steps, and then eventually figure out how do you want to operationalize it?
All right, so takeaways from the session. One, there are many potential use cases for Gen AI in insurance. Right now they're kind of focused more on efficiency, but over time, companies will start to move up the value chain. Gen AI is likely to augment decision-making for agents, brokers, and underwriters, not replace them. And then lastly, any use of Gen AI needs to consider the risks and the benefits versus doing nothing. We do have time, 5 minutes or so, for questions, if those have any questions. I think if we're going to do questions for the audience, we'll circulate a couple of microphones. They'll get their steps in.
Thank you. So you talked about the risks in terms of usage. Do you see more distinction of the risks between the brokers using Gen AI on digital trading platforms and carriers using Gen AI for product placement, cross-selling, upselling, and even product development, and trying to configure their policies to be more, more conducive in these digital trading platforms where Gen AI is used by the brokers for policy comparisons and recommendations. Do you see any kind of potential conflict on the horizon between those two different use cases between the brokers and the carriers? And, or do you think it's two sides of the same coin?
Yeah.
No, at this point in time, no, because the way even the regulators are actually considering the risk, it is not based off specific use cases, but it is based off the technology that you are using, as well as the governance that is required in terms of actually using it. So essentially, at this point in time, the risk would be similar across the insurance value chain, whether you are using it as a broker for the trading or insurers are using for policy comparison. It would be pretty much the same. Because of the technology that is being used, the machine learning and Gen AI, the way it is being used, the models that are being used, they do not differentiate the use cases at this point in time. Eventually, it may evolve because, as we know, right, the Gen AI as a technology in itself is evolving because essentially the logic remains the same. It is creating a new contextualized data for you. So risk would be similar in both the platforms.
How you govern the risk may differ, right? Because, it's single carrier, with product design versus, a platform where there's multiple products, right? So if you think about it from the who's using the platform, that is taking information from multiple carriers, they have to be aware of what each of those carriers, how each of those carriers is governing the individual risk. Risk is the same, the governance would be different.
Jason Lapham, Colorado. So you mentioned Colorado a few times, so I felt like I had to chime in here. Thanks for the presentation. Just to be clear, though, for Colorado, it is 169 is specifically focused on unfairly discriminatory outcomes relative to the protected classes that are enumerated in the statute. The other piece, and so you mentioned a lot about governance and how we think about governance, I think can vary to some degree. There's sort of best practices and so forth that I think a lot of folks agree on. The NAIC bulletin, I think, reflects those best practices in many ways, but there's also the quantitative testing, which the bulletin references.
Is coming up.
Yeah, but that's the part that that's the piece that Colorado is still struggling through relative to life insurance underwriting. But I think that's going to be a really critical piece to provide evidence that the output, right, the outcomes resulting from the use of these tools is in fact not leading to unfairly discriminatory outcomes. Right?
Yep. One of the things that I've seen around this area, at least talking to insurers in Colorado, it's at least for the first part of the regulation, which is due in December, is not just the governance piece of it, because most of these organizations have risk and compliance already in play. Having said that, who owns it? That has been a bigger conversation because the way the regulation was laid out was very specific to the usage of data. The conversation has been that whether it is your chief data and analytics officer or is it sitting under your risk teams. And that push and pull between the organizations has been a larger conversation. Eventually, most of them would comply, right? But the problem would be that unless they figure out who is accountable for making sure that year after year they are able to govern it appropriately, they need to decide how they are going to create this AI governance within the organization. And that's what they've been trying to figure out right now.
I think there's less than a minute left, so at least on our timer, we probably take, I don't know if we can take one more or not.
We have 42 seconds.
Quick question, quick answer. Thank you.
Thank you so much.